Hello, my name is Timothy Lee Wright Sr., and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. Inside this powerful course designed to transform your financial future, I've meticulously condensed over 1,000 of my public YouTube videos into 40 highly efficient lessons that span just 2.5 hours. This course is strategically designed into 4 phases to help guide your learning in the most logical and effective way possible. Phase 1 lays the groundwork, covering essential financial literacy like budgeting, banking, and taxes. In phase 2, you'll move beyond the basics, learning about brokerage accounts, figuring out how much you need for your own individual retirement. You learn about how to do fundamental research on companies, and you'll also learn how to conduct technical analysis by looking at stock charts. Phase 3 empowers you to build a robust portfolio and leverage your capital using advanced techniques like options and futures, and it also teaches you the importance of backtesting your strategies. Finally, phase 4 takes a deep dive into the advanced ICT concepts, giving you a professional edge. Each lesson includes a short quiz to help solidify your understanding. By the end of this journey, you'll have the confidence and tool that you need to make intelligent investing decisions, manage your money without fear or ambiguity. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you for $69.99. Yes, $69.99 for all of this here. Good evening, good evening, good evening, everybody. Good evening. Thank you very much. Thank you very much. Gang, where y'all at? Y'all got me here by myself. Shout out to everybody pulling up in YouTube. Gang don't want to pull up inside the Zoom. I'm paying for Zoom for nothing. Gang ain't even pulling up. Now I can stream to YouTube for free. It don't cost me nothing to stream to YouTube. I'm paying for the Zoom. You know what I'm saying? I can stream YouTube through OBS for free. I'm paying for the Zoom. Ain't nobody pulling up in the Zoom. What's happening? What's going on, everybody, man? Y'all give yourself a round of applause for tuning in to Tim's Tidbits. I like YouTube better. LOL, can't lie. Who is Arico? Who is Arico? I don't know that name. Who is that? Arico. What's going on, Arico? Again, man, y'all give yourself a round of applause, man. Let me look out there. Oh yeah, y'all look good. Y'all look so beautiful. I must say, y'all look beautiful, man. I appreciate y'all for tuning in to Tim's Tidbits. If this is your first time tuning in to Tim's Tidbits, please allow me to say welcome. Why am I looking at the mic? Why am I not looking at the camera? I'm like looking at the mic like, if this is your first time tuning in to Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning in to Tim's Tidbits, I still want to say welcome. But I want to give you a nice hearty, well, thank you for always tuning in to Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., a.k.a. Aranya Gundy. That should be a big spot if you don't hablo Espanol. And you are tuned to another episode of the NQ Intraday Price Action Recap. Yeah, man. What's going on, y'all, man? What's up, honey? Shout out to everybody that's pulling up, man. I appreciate y'all for tuning in. Hey, man, did Price do anything today that caught you off guard? Did Price do anything today that caught you off guard? Oh, that's over there. Did it do anything that caught you off guard today? If so, raise your hand. Right? Raise your hand. Be like, hey, Tim, I expect the price to do this, and it did that. I wanted to do this, but it did that. I was looking for this, but it did that. If you was looking for this, and this was where it's at, say, hey, that's me. Hey, that's me. Hey, that's me. No, nothing. Nobody. All right, man. We're going to go ahead and get into it. Shout out Light Skin Deborah. Shout out JT. Shout out Marco. I got to do this right here when I say Marco. Hold on, let me get it right. Shout out Marco. Shout out Felicia. Shout out here, here to learn and share. Everybody that's pulling up, man, I appreciate y'all. Y'all do me a favor, man. Hit a like for the algorithm and subscribe to the channel if you're not subscribed. If you are subscribed, I appreciate you. Did it do anything you did not expect it to do? Nope. Price rarely does stuff that I don't expect it to do, right? Meaning, not saying that I'm always right. The reason why price doesn't do things I don't expect it to do is because I go into it without a bias. I look at price without a bias. I just look at probably like, hey, are we in a buy program or are we in a sell program? All right. If we're in a buy program, I look for when price is respecting bullish order flow. If we're in a sell program, I look for when price is respecting bearish order flow. And if I anticipate it to respect bullish order flow and we're in a premium, sometime I'll drop lower and look for bearish order flow to take a short back down to the PDA rate I anticipated to come back down to in a discount, right? So price don't never do anything I don't expect it to do because I go into it without any expectations. I've gotten to the point where I'm just looking at what order flow is offering me, and that's the way I go into it. Right? I look at price sort of like how momentum traders look at price. They don't care if it go up or down. They're not bullish or bearish on the day. If prices got momentum to the upside, they buying. If it's got momentum to the downside, they selling. If it's chopping in a range, they just sitting there waiting for it to break outside of the range. Right? And that's pretty much the same thing I do. Right? If it's in bullish order flow and we're in a premium, I look for opportunities to short back down to a discount. If we're in bearish order flow and we're in a discount, I look for opportunities to take a long back up to a premium. Those are the trades that I'm taking very short little scalps, right? If we're in bullish order flow and we're in a discount, I'm looking for opportunities to sweep sell side liquidity and buy in a discount. If we're in bearish order flow and we're in a premium, I'm looking for opportunity to sweep buy side liquidity and take a short in a premium. All right. So that's why it rarely does something that I don't expect it to do. Right? Because I'm going into it without, and that's why I say rarely, because even though I go into it without a bias, sometimes we get sucked in and be like, I know what I see. I know what I see. I know, and try to force our wheel on the market, and we get oops upside head. I said oops upside head. Oops upside head. I said oops upside head. Hey Kim, how you doing? Y'all see how easy that was? Somebody asked me a question and I answered it. Everybody else just be sitting back like this right here. And then soon as somebody else said, "Oh, that was such a good question. That's exactly what I wanted to ask." Hold on. Y'all know what I just did right now? Who know what I just did right now?
You threw a rock under the porch.
Oh, I need to find me a hit dog sound so I can play the hit dog sound. All right, man. We getting ready to get into this, but like we always do at this time, before I start this off, I just want anybody who may be present now or anybody who comes up later and watches this live stream, if you feel like the things that I'm talking about are cherry picked, if you feel like oh, this guy can't really trade. Hey, I just want you to know that now just get that out of the way. We just had to get that out of the way. All right. So now let's go ahead. And now that we all on the same sheet of music, let's go ahead and look at our daily time frame. All right. Now, looking at our daily time frame, we see that price has come to Picasso's house. All right. Tim, what's Picasso's house? That was our target up there. Do we still got that? Let me see if I still got that in my, I should still have that in my TDA over here. I should have that in my TDA over here. Unless I deleted it. I must have deleted it. That's my long-term low. Yeah. I think I deleted it out. Yeah, I deleted a lot of, I cleaned up my charts the other day when I was getting ready to do my chart prep. And yeah, I deleted it. But I think it's still showing on the continuous contract. Is it still? I guess not. I took it off of this one too. Yeah. Anyway, it used to say like all-time high would be adjust on. I guess I deleted it off of this one too. Oh well, it is what it is. But y'all know what I'm talking about, right? That was our target. That was our upside target there. Okay. That's Picasso's house. We've made it to Picasso's house. And what has price been doing since we made it to Picasso's house? Right? Price has just been consolidating. Right? We made it to Picasso's house on April the 17th, which was a Friday. Right? Which was last Friday. And then Monday and today, right? We just been sliding to the left. Sliding to the right. When we say that, price make a big move, then slide to the right. What in the world? Get back over there. I hit undo too many times. Right? Price make a big move, then we slide to the right. All right? So we just been slide to the right. This is normal price action. Right? Whenever, I ain't gonna say whenever. A lot of times when we take liquidity, reach our destination, make it to Picasso's house, whatever you expand the dealing range, whatever you want to call it, price will go into a consolidation pattern, a accumulation pattern, a engineering liquidity pattern, a sideways market, whatever you want to call it. We tend to do that right there at that breaker or mitigation block, depending on what's present at that area where we take out that liquidity. And in this case, we have us a breaker right there, right? We got a high, a low, then we've come back and made a higher high. So we got a breaker right there. I'm just skipping over all of this, right? High, low, higher high, right? Even though we moved inside here, right? The overall move, high, low, higher high, and we are consolidating right here at this breaker. All right, if we jump over to the continuous contract, right, we can see it a little bit better, a wee bit better, right? We can see that breaker a wee bit better on the continuous contract. Now on the continuous contract, to see it like this, you have to have your B adjust turned on to see it like that, right? You have to have your B adjust on to see it like that. Okay, And why is that? Because this was the high that we was looking at with our B adjust on. Okay, 26,863 and 3/4. All right, and if we look over here, right, the high on the front month, right, was 26,754 and 3/4. That was the high on the front month. And if we look at the high with B adjust on, what did we say that was? 26,000. Wrong one. 26,863 and 3/4. Right? So 26,863 and 3/4. All right. So those were our liquidity pools right there that we were watching. All right. Now, on the daily time frame here, we are going to look at some not so obvious areas to help you navigate price action intraday while we're up here at all-time highs and we're not trying to pick tops. Okay? Anybody want to do that? Anybody want to look at some not so obvious stuff? We've been doing it already, but do you want to look at it again? Yes, no, maybe so. Y'all tell me in the chat. Do y'all want to look at some not so obvious stuff to help you navigate price? Huh?
Yes.
Okay. I got one yes. I got a yes in the chat. Joe, I don't speak French. I don't speak French, Joe. I don't speak French. Joe coming through trying to show off his little hook don't funny. He must not be in the dojo tonight. He coming through with the hook don't funny. He ain't in the dojo tonight. All right, so looking at the daily chart, right? With all seriousness, looking at the daily chart, we see that we're up here at all-time highs. So since we're at all-time highs, you want to have something to focus on, right? So you want to have something to focus on per the algorithm. So we can take our magical Fibonacci tool, right? And we can go over here and we go to our bullish projections because we're projecting up, right? And if we look at price, we know that this was our manipulation leg when we came down into the sell side liquidity. I want to put it on the screen for anybody who may not remember or know. Boop. That's our manipulation leg when we came down into the sell side liquidity, right? And then we displaced the weight. So if we want to know how far can this manipulation leg swing back up, right? You want to go to the lowest low and come back to the very next swing high, right? So from that low to that swing high, that's the manipulation leg that you're measuring up, okay? And if you notice, let me fatten these up so you can see them. We've talked about this before. This ain't nothing new. We've talked about it before, but we just, you know what I'm saying? Repetition is the mother of skill, all right? So these are your projection levels. These are the settings for anybody who want to know, how do I do the projections, Tim, right? So these are how you do the projections. I got mine all the way up to -11. You don't have to go up there. All you do is make a 0, a 1, and then you go in half standard deviations as high as you want to go. -0.5, -1, -1.5. Tim, why are you putting negative numbers in? Because when I stretch my Fibonacci tool, I want to stretch it in the direction I want price to go. Right? If you put positive numbers in, you have to stretch it in the opposite direction, and that don't make sense in my mind. Okay? So there's your settings for anybody who want to know it. As you can see from our manipulation leg, right? Price came up, right? So one standard deviation here, right, was just below this high right there. So this is one standard deviation for this price leg right there. So a measured move, right? A lot of people like to target one standard deviation as their low-hanging fruit, right? They just not even trying to target buy side liquidity or whatever. They just, hey, I'm just going to target a one standard Hey, there's nothing wrong with that, right? That would be your target, okay? So now let me blow up the numbers so you can see the numbers well, right? And so if that was your target, right, you would have been targeting that 26,564 and a half. Now, right, we see we came one standard let me hide this other stuff right here so that it's not no confusion over there. Let me see here, my daily high, my daily low, weekly high and low. All right, then my new week opening gap. Nope, that's my new, wait a minute. Oh, I was too low. All right, there you go. All right, now, all right, as we see, one standard deviation was there. So we've come one standard deviation, and now, right, we're right there using that PD array, if you will, because that's a projection that the algorithm is anticipating to go. You can look at it as a quadrant or an octant. When you grading a range, you can look at these projections as the same thing, right? So as you see now that we've come up there, we're using that projection level as support. We also said that that was inside a bullish breaker over there. So we're using that bullish breaker as support, and we're respecting that one standard deviation price level handsomely. All right. Now, how do you manage price while we're up here? We're going back to Mr. Fibonacci tool. All right. So we have cleared the one standard deviation, right? We have intersected the buy side liquidity that we was targeting beyond this standard deviation. All right. So now that we've cleared that, right, you always want to target a deviation that's above your liquidity as your target, right? Because you're anticipating price to draw into that liquidity and even exceed past it. So like this one standard deviation that's below the buy side, it's okay to target that. That's your safe target, right? But you want to target a deviation that's above there. And you say, but Tim, we're floating out there in the middle of nowhere. That's your first clue. Floating in the middle of nowhere, right? Follow me. Everything can be put in a grade. Everything can be graded. Everything can be put into a quadrant or an octant. Everything, right? So what do we say? Event horizon is the space in between two PD arrays, right? So on this time frame here, right, this is your next reasonable target because there's nothing over here for us to judge. So the algorithm has to have a way to know what price to go to, right? So since there's nothing over there to go off of, you want to use your algorithmic projections based off the manipulation leg. And because it manipulated this far, it now knows that 25,663 3/4 is a half standard deviation. 25,564 and a half is a full deviation. It knows that 27,465 and a quarter is 1.5. 28,366 is 2 standard deviations. It knows this, right? And not only does it know that, it knows that this here between 26,564 and a half and 26,465 and a quarter, that's close enough for government work, is about 898 points, right? That's a very large range, right? So what can you do inside that very large range? You guessed it. Grab Mr. Fibonacci and put Mr. Fibonacci in the 8th grade, right? So we're going to come here to this 27,465 and a quarter. I'm going to get it there in a minute. And then that's 64 and a half. We just going to do it like this. So 64 and a half. And 60. Uh-oh. Wrong one. 65 and a quarter. And then 64 and a half. Right? Right there. Now, do you see what I see? Yeah. Right? Make this thicker so y'all can see it. Book up. When you put this into octants or quadrants, right? This red line right here is event horizon. In between this PD array, that PD array, this liquidity point, that liquidity point, based off of the algorithm's range. Okay. Now, as we all know, right, everything has a discount and a premium. So when you're looking at, let's put this event horizon in the 4th grade, right? We're going to put them in the 4th grade so we can get this a little bit clearer, right? So we're going to take off the in-betweens and we're going to focus on the quadrants, right? These are the quadrants of that range, right? Those are the quadrants of that range. Now, whenever you're looking at event horizon or any or dealing range, right? When you're looking at event horizon or a dealing range, anything that you put into quadrants like this right here, the bulk of your trading opportunities are going to reside in between that upper quadrant and that lower quadrant. This is where the bulk of your trading opportunities are going to reside, right? So, dog it, Tim, stretched it right in the way. So, looking at that, so you say between 27,240 even and 26,789 and 3/4, that's where the bulk of your trading opportunities are going to lie, right? That's where the bulk of the trading opportunities are going to lie. So if this is the range where the bulk of my trading opportunities are going to lie, right? I know that 27,015 is event horizon, right? What is that? That's an upside target. I know that 27,465 and a quarter is my next deviation mark. I know that that's a target. Okay. Now that I know those places, right? Now I can say this is where the bulk of my trading opportunities are going to come from inside this event horizon range. So now I can take my Fibonacci tool, right? And I can put the bulk of my range where I expect the bulk of my trading to come from, and then I can grade that, put that into the 4th grade, right? So what did we say our top target? Our top was 27,240 even, and the bottom was 26,789 and 3/4, right? And then we fatten those lines up, and we're going to make them dots so we can tell the difference between our tools, right? So we can tell the difference between our tools, make them dots. And so now we can see we have a lower quadrant, a equilibrium, a upper quadrant, and a high, right? So right now, price has traded up into our lower quadrant, and right now we're seeing discount sensitivity inside our lower quadrant, right? So we're trading up to a premium PD array, right? And we're seeing discount sensitivity, right? We are also seeing, right, that price is being supported by a discount PD array, right? Remember, that's the high there when we broke that structure, right there. That's that high there when we broke that structure. So we have that deviation point and we have that order block over there, right? And price is being supported by that at this time, right? It's not showing a willingness to blast up, and it's not showing a willingness to tank down, right? So now we got an understanding of why price is stopping right here. Why is price stopping right there? Because where do our best shorting opportunities come from? In the discount of a premium PD array, right? So when we came up into this area right here, price traded up, fell just short of the lower quadrant. The lower quadrant of that, let's look at that price. I'm sorry for not making it bigger if y'all can't see. It is big. What? Oh, the numbers. I didn't change the numbers. I'm sorry. I didn't change the numbers. That's what it is, right? So the high on this candle right here is 26,901 and 3/4. And that lower quadrant is 26,902 and a half. So that's, 902 and a quarter. So that's 901. That's, what is that? That's 2 ticks. Yes, that's 2 ticks away. Because 901 and a quarter, then 902, yeah. So it came 2 ticks away from that lower quadrant and then backed off and closed down here at 26,721 in a quarter. So after touching that coming very close, it dropped 180 points, 180.5 points after touching that lower quadrant, kissing that lower quadrant, which resides in the discount of a premium PD array, right? And if you don't think that's a nice short, then hey, I don't know. 180 points after touching that, but there's no algorithm. Yeah, right, man. If you can't see it, all right. So same thing when you're working inside of these ranges, you always want to understand, right? What is price reacting off of? What is price doing, right? You say, Tim, what about yesterday when price just came up here and stopped right there and then dropped back down and closed off of the high? What is reacting to right there? Okay. Now, remember, right? What do we say? Let's go to our Fibonacci tool, right? So we get our Fibonacci tool here, right? Remember, we got PD arrays everywhere. Right, we got this high right here at 26,863 and a half. Right, we got this right here at 26,754 and 3/4. Right, seven 754 and 3/4 and 63. All right. Okay. We go in there, and if we notice, all right. Okay, right on here, right? If you're just watching event horizon, in between those two liquidity pools right there, right? We came up above event horizon, right? And then dropped back down and closed right there. What do we talk about, right? When you're trading inside event horizon, where's the bulk of your trading or inside any range that you got quadrants on, where's the bulk of your trading opportunities? From the upper quadrant down to the lower quadrant, right there, right? That's your range right there. And if you come in here, right, go from there to there, just looking at yesterday's range, right? Go from there to there, just looking at yesterday's range. I'm gonna come back here, chop that off, right? And then we're gonna go inside and look at this little area here, right? That's that high right there. We're gonna stretch it over there like this. Don't extend it to the right. Make it orange to make it stand out, right? And then we're just gonna drop down into a 5-minute time frame, right? And squeeze up price right there, right? And this is yesterday, right there, when we wicked up in there, right? As you can see, this is where the day started. This is where the day ended. Man, we stretched it out just over that one day, right? When price traded up in there, right? When price traded up in there, we came up, poked above that upper quadrant, displaced back down, traded back up into that lower quadrant, right? Came back down, and then later on in that day, right, price came back up, went to event horizon, and then came back down. But there's no algorithm.
I got let him cook.
Y'all do me a favor, man. Hit a like for the algorithm and subscribe to the channel if you ain't subscribed. You feel me? Y'all think they gonna ban me off YouTube for this? Do y'all think they gonna ban me off YouTube for this? Is there anybody who has anything for me before we drop down into our intraday time frame? Anybody got any questions? Any questions? Weekly high, daily low, midnight. That's all I needed from there. Which gap did I have on? I had on the new week opening gap, new day opening gap. All right, those are the octants for that. I think that's it. Nobody has anything? Look at the chat. Mickett. Does that say Mickett Thomas? Is that Mickett Thomas? What's going on, Mickett Thomas? Y'all give it up for Mickett Thomas for pulling up. I ain't never seen that name before. I don't see no questions in the chat. Gang, y'all ain't got nothing. All right. Appreciate you for pulling up, Mickett Thomas. Make sure you hit like for the algorithm and subscribe to the channel if you ain't subscribed. Mickett, if you don't know, let's go full screen and talk to Mick. Mickett, is this your first time coming, or you recently popped up on the channel? How long you been tuning in, Mickett? I want to break down and just joined today. All right, then. Y'all give it up for Mickett. Just pulled up today, man. So, Mickett, the way we do this around here, man, it's like at 6 o'clock, I try to go live 6 o'clock every day, Monday through Friday, but sometimes life be lifing. But I go live at 6 o'clock and be running my mouth and breaking down what price did that day. And then afterwards, right, the next day at 9 o'clock a.m., 12 p.m., and 3 o'clock p.m., there'll be videos that drop called Gems from the Live Stream. So the first video that drop at 9, it'll be what we talked about during like the higher time frame, like the daily or whatever the higher time frame is. Then the video that drops at 12 would be this next section that we about to go into when we drop down to the intraday time frame. And then the video that drop at 3 will be the section when we drop down into the New York session, right? And I call them Gems from the Live Stream so that when people go back and want to like revisit the stream, then they don't have to go through a 2.5 hour live stream trying to find a point that they want. They know, oh, Tim talked about that during the New York session. I need to go look at this video, the 3 p.m. video. That's the New York session, right? Or Tim talked about that when we first dropped down. I need to go to the 12 p.m. video. That's the drop down into the intraday. Or he talked about something on the higher time frame. I want to revisit that. Oh, that's the one that drop at 9 in the morning, the higher time frame video. You know what I'm saying? So that's the way we do it, man. Appreciate you for hanging out. Will y'all give it up for Mickey again, man? All right, man. Let's go ahead and drop down into our intraday time frame. I don't see nothing in the chat. We're gonna go ahead and drop down to our intraday time frame. And as we can see, price has just been going up. So just like we did on our daily time frame just now. Oh man, I ain't sharing my screen. Y'all ain't even tell me I wasn't sharing my screen, man. Come on, man. Y'all got me slipping. But just as we see, right, price has just been going up, right? And we've been up here just consolidating up there at that daily breaker, at the PD arrays that we talked about, the levels that we talked about already, right? So now we're going to continue that on the intraday time frame because, hey, that's where, you know what I'm saying, these PD arrays are going to help you shine, right? Is there a top trade you watch, or is it only futures? What you mean top trade? Like another instrument I watch? I only trade NQ futures, but everything we talk about work on any instrument you look at, right? I only trade ICT concepts, and they work on any instrument you look at. It work on stocks, it work on futures, it work when you trade in options, it works on everything. All right. Because I used to be an options trader. I used to trade options on the SPX and the SPY. Used to do Apple from time to time, Tesla from time to time, but now I only trade futures because, you know, when the market be chopping, it kills your premium on options. All right, let's look at what price has been doing with these not so common PD arrays that people really don't pay attention to, right? So we're just going to look at this week so far, Monday and Tuesday. Okay, so looking at Monday and Tuesday's price, all right, as we can see, price came up, right, on Friday, right, and set a high. Okay, set a high. That was our new all-time high, right? That was our new all-time high. We had a huge gap down for the new week opening gap. For those who don't know, the new week opening gap is the close for futures at 5 o'clock on Friday to the open for futures at 6 p.m. on Sunday. That's Monday's trading day, right? Right here. So that's our new week opening gap right there. All right. We talked about this yesterday, how price will utilize, right, the octants inside of, right, our new week opening gap, right? It utilizes the octants inside our new week opening gap. Octants, quadrants, however you want to look at it, right? Looking at a 15-minute time frame, okay? It's getting mad junky over there because this is my stuff from what I was watching from today. So we'll just stay on the 60-minute time frame so we don't see all that junk, right? But as you can see, price stayed well within, right, our new week opening gap, right? We made the high, we created the new week opening gap, right? and then we traded inside the new week opening gap, stepping up the gradients, right? And then stopped at the upper quadrant for the day, right? This is as far up as we went. We wicked above, right? What do we say about wicking above there? Price is showing you, hey, I want to go in that direction right there. I really want to go in that direction there, but I got to go handle something first, right? So as we see, it came down, took out that liquidity, right? And then went back up and then finished off the day here, right? Below the upper quadrant, all right? And then when we opened up today, what did price do? Price continued to stair step up these octants until it came up and took out last week's high. Once it took out last week's high, what did it do? It stair stepped back down the octants, right? All the way down to the low of it, okay? Push back up, all the way up to the upper quadrant, okay? And then came all the way back down and swept out that liquidity. It's some liquidity that we pointed out on the pre-market analysis this morning. Oh yeah, Mick, we do a pre-market analysis, a public pre-market analysis every Tuesday at 9 a.m. right? So during the pre-market analysis, we talked about that sell side that was down there, and we came all the way back down and took that out. And once we took that out, we rallied back up, touched that upper quadrant, right? Traded up there. There's a wick there, and plus there's a implied fair value gap there. We're not gonna get into all of that. And then we dropped back down and closed right there at consequent encroachment of the new week opening gap, right? So all the levels that people aren't normally looking at, right? You can utilize just this one PD array and make all of your trading decisions based off just this one PD array. Because just like I said yesterday, when price is just ranging like this, when it's just right there inside this range, I'm not primarily looking for PD arrays on this time frame right here, because it's just a whole bunch of back and forth, back and forth, back and forth, right? I'm more so focusing on these quadrants and octants to give me my narrative, give me my bias, give me my looking for the signatures to form at these bus stops. And then for the lower time frames, I may have a couple PD arrays that I'm keyed in on. But when you're ranging like this here, or when you're up here in the middle of nowhere and you don't have stuff you can look over here to the left and say, hey, we're reacting off of this, right? Treat your PD array just like a dealing range. Put it into quadrants or octants and look for signatures to form at these bus stops, right? And remember, when everything you grade, right, you're looking for the bulk of your trading opportunities between that upper quadrant down to that lower quadrant right here. This is where you're looking for the bulk of your trading opportunities. And when you look at price inside of this little rectangle where I'm drawing it, where are the moves when price is moving? In between that upper quadrant and that lower quadrant. We go into a consolidation there. We shoot up. We drop down. We shoot up outside of there, consolidating, right? Once we come inside of it, right? Even though we're consolidating there, look at the range. Look at the range of this wick. Look at that wick, right? There's a lot of movement in there. This area over here is just a higher resistance than this one over here. This one was a straight shot down. It's pretty much a straight shot up, right? So what do you anticipate after the algorithm makes a large range or makes a low resistance move? Low resistance, high resistance. Man.
Let him cook! I said let him cook!
Man, y'all do me a favor, hit a like for the algorithm and subscribe to the channel if you ain't subscribed. Do anybody got any questions before we go into the New York session? Do anybody got any questions before we go into the New York session? Are y'all seeing it yet? Is it making sense to you? Gang, talk to me. Is it making sense to you? Do you feel me? Is it making sense to you yet? Y'all ain't talking to me today?
Yes.
All right now. Y'all know
Yes.
y'all get my feelings hurt and shut it down. I can't be out here talking to myself. Y'all, I'll be here talking to myself. All right. Let me turn off my new week opening gap here. Remember, we're still trading inside that new week opening gap, and will. Y'all give it up for here and learn show for knowing. Just for knowing. All right. Okay. So we're dropping down. While we drop down into, we're getting ready to focus on the New York session. But before we lock in and focus on the New York session, right? Just want to point out the fact that we're still inside. God dog it. Point out the fact that we're still inside that new week opening gap that we was talking about. But now that we're inside that new week opening gap and we're dropping down into the lower time frames, right? What do we say? We go up for narrative and down for detail. So as we drop down into the lower time frame, we want to use the information that we got, the knowledge that we know about the concepts, and we want to break it down and get more detail from the lower time frames. So with that being said, let me turn on my my indicator so that we can focus on the New York session. All right, I'm gonna chop all this stuff off outside of the New York close. All right, so this is everything. Chop everything after that's outside of the New York close for today. Okay, so looking at this is from New York pre-market at 7 a.m. over to the New York close at 4 p.m. All right, so this is our pre-market through our close of the New York session. All right, if you notice, right, I have a few other PD arrays marked out. Right, this is that liquidity that we talked about. Remember I said there was some liquidity that we pointed out on the pre-market analysis. Where do we get this from? It says sell side liquidity, regular trading hour AM, right? The way I mark it, if I just got AM on there or PM on there, it's either from that day or the day before, right? So when you see sell side liquidity, regular trading hour AM, that's from the day before, right? If it says sell side liquidity, regular trading hour with a date after the AM, that's from whatever that date was, right? So we look at our regular trading hours and you can see that this swing low right here was from 11:07 in the morning yesterday, right? Our regular trading hours buy side, we said that was our daily high. We weren't going to mark that out because it already lined up with a level that we had, and it was another one that would line up with a level that we had already, so we didn't mark them out. All right, so that's the sell side that we were talking about. If price got heavy up here today, right, because we said we had bearish divergence with the ES, so if price got heavy, we could use that as confluence that it wants to go lower, and that was the sell side liquidity that we targeted for the day. Tim, why didn't you just target the low? Because we're in a buy program, right? And this is liquidity that can be swept, right, without invalidating our dealing range that we was in, right? This was the low of our dealing range, and that was the high of our dealing range. So this was liquidity. We can come all the way down and sweep this without invalidating the buy program on this on the intraday time frame. All right, that's why we picked out that low right there. Now we have a 15-minute SIBI right here. If we go to our 15-minute time frame, okay, we can see that this right here is a 15-minute SIBI right there, okay, and I'm anticipating that to support price because this is the first SIBI that was created when we displaced away from here. Now, it's the not only is it the first SIBI when we displaced away from there, right? It's also created in the discount of this move. So if we create a SIBI in the discount of a move, right, and price is bullish, I'm anticipating this to act as support when we trade down into it, right? So that's why I had that marked out, because I want to see price. Is price going to be supported by this inversion fair value gap? Because we're back above it now. It's the first SIBI that was created on this displacement down, taking out that liquidity, then rising back up and taking out that liquidity there. So I'm looking for that support there. That's why I got that marked out. All right. Then we have our liquidity pools, our pre-market high. I mean our pre-market low. What's my pre-market high? My pre-market high up there. My pre-market low. My opening range high. My opening range low. Right? Those are the liquidity pools that you want to be aware of going into your New York session, right? Why do we look at those liquidity pools? Because you let the algorithm establish a range, engage with one side of the liquidity, and then show you if it wants to continue or reverse and go to the opposite end. Okay? Now, let's go ahead and drop back down into a 1 minute time frame, and we're going to look at what price did today after 9:30. All right, so this is our 9:30 open right here. So our 9:30 open, we opened here at 9:30. We opened up just below midnight. This black line right here, that's our midnight open, right? That's true day open. This is our opening range gap down here, right? This is the open at 6 o'clock, right? This is a bullish new day opening gap. So the high of this is our 6 o'clock open, right? So we're opening up just below midnight, just below the true day open, and we're opening up above the futures day open, right? So we're very near an opening price on either end, right? So price is hovering around that fair value area, right? We already said that the higher time frame was in a buy program. We've reached a higher time frame destination, a weekly high, right? And we've gotten a bearish break in market structure here, right? We was talking about this as we was doing our pre-market analysis. We said if we trade down below this here, that'll give us a bearish break in market structure on this intraday time frame, right? And then with a bearish break in market structure on this intraday time frame, combined with the bullish divergence on the ES, right? Combined with the bullish divergence on the ES, when we looked at the ES, we can see here, bearish divergence, I'm sorry, right? The NQ made a higher high, the ES made a lower high, the YM made a higher high, right? That was our bearish divergence, right? Michael puts the stronger emphasis on the divergence between the ES and the NQ, right? We had bearish divergence in between those two sisters. So combining that with the bearish break in market structure, right, that gave weight to if price wants to continue down, right, we have a 15-minute PD array that we can draw into and look for some type of support or not, and our regular trading hour sell side liquidity that we can look at price drawn into and still be bullish. Not saying it will, but and still be bullish. Okay, So we're looking, like I said, if we're in a buy program, I look for opportunities to take shorts to a discount to certain PDRAs, because when we open here at 930, we're in a slight premium, because if you map out the dealing range, I'm not going to map it out now. Well, I'll go ahead and map it out now. All right. So for those who wasn't on the live stream. All right. So if we come here and we get our consequent encroachment mean threshold, that's just going to show us the 50%. Right. Remember we said that was our lowest low. This was our highest high of our dealing range up there. Right. And if you look at where the midpoint is, right, if you look at where the midpoint is, you can see, I just want to get, y'all know how I am. I got to have it right on the spot. Right. So if you look at where the midpoint is, you can see that equilibrium is right there at 26,718 and a half. Okay. 26,718 and a half. And that is also, if we go back and look here, that is also right there at consequent encroachment of the new week opening gap. I know it's very hard for you all to see, but if I turn on the fib tool, you can see that red dotted line right there. That's consequent encroachment of the new week opening gap. All right. So another very important spot. Remember that new week opening gap that we was looking at, and we said we was looking for trading setups at those bus stops, right? Looking for trading setups at those bus stops. And then let's pop that back on just for one quick second. Look at the, right? Remember we said, okay, in between the upper quadrant, let me find the upper quadrant. Crazy hard to see. It's around here somewhere. Let me make these numbers bigger. There's so much going on. It's so hard to see these. All right, there we go. So right there, it's upper quadrant. Right there, down to that lower quadrant, right there, right? That's the upper quadrant, that's the lower quadrant for that new week opening gap, right? And then just looking at price, right, between yesterday New York session and today's New York session, where is the bulk of the trading opportunities residing? Inside that area of that range, right? But there's no algorithm. Ha 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 ha. Yeah. All right. So now, as we see at 9:30, we open up at 9:30. And we have a quick pop-up above these highs, but we immediately attack our pre-market sell side. Right? We immediately attack our pre-market sell side. Okay? So the overall time frame is bullish. Right? The current intraday time frame is in a sell program, right? Remember we came down and we got a bearish break in market structure there. So we're looking at that smart money reversal. After we took that and took out that low, that's our low risk sell. That's our smart money reversal. We're saying, okay, we're on the right side of a market maker sell model, right? The short-term intraday is in a sell program. When we open up, we pop above this high, right? So a quick manipulation of buy side, then instantly drop down into our opening range sell side. I mean, our pre-market sell side. Now, as far as the algorithm creating a range, pre-market high, pre-market low, and then engaging with one of those sell sides, right? We created this high and created this low, right? But it's a bearish dealing range. It's inside of a sell program. So we immediately took out the sell side of our dealing range first. That goes against the order flow, the current order flow of this dealing range, right? So since that goes against the current order flow of this current dealing range we're in, we're anticipating this drop down to eventually become a wig snatcher and give us an opportunity to sail down into our PD arrays that we see down there, because it's going against the order flow. We're attacking sell side of our range first, okay? And then once we attack this sell side, notice here, Tim, what are these lines right here? What do you got graded right there? I'm glad you asked that question, right? That right there is our opening range gap of today, right? For those who don't know, your opening range gap is the difference between price where you close that on the day before, right? At 4 p.m., right? At 4:15, really, where you closed at 4:15 and where you opened up at 9:30. So this right here is the gradients for that opening range gap. Okay, that's what that price, that's what that is in price. All right. So now that we got that knowledge, right? If price is truly bearish at this dispensation in time, not thinking about the higher time frame, right? Because what we said on the higher time frame is bullish, but we're up here in a premium. So since we're up here in a premium, we want price to prove to us that it doesn't want to drop down any lower and it wants to go higher, right? So since we're up here in a premium, we're anticipating price to pull back to some sort of discount, right? So we're in bearish order flow, currently in bearish order flow, and then we immediately attack the sales side. So now we're looking for signatures that price wants to come back up, right? To engage some level of buy side, to manipulate some level of buy side. And what are we using to show us that it wants to stair step back up? We are using the gradient levels of this opening range gap. See how it's marching up these gradients, right? Once it gets above there, we take off and trade above that high right there, right? Once we get above that high, now notice you say, Tim, we never made it back to the pre-market high. I see that, right? What is that showing? That's showing weakness. That weakness is confluence with what? That bearish divergence. Remember that bearish divergence that we got over here on the ES, right? We got, God dog it. We got bearish divergence on the ES with the ES, right? That weakness is unable to get back to that buy side after attacking that sell side. That weakness is tying with that bearish divergence. Tim, I thought you said you want to manipulate liquidity of a range. You're right, right? Notice this right here. This is our opening range high. This is our opening range low. Well, Tim, what does that have to do with anything? Oh, you must have forgot. We got us an old friend that's called the Time is King graphic, right? So not only do we have a dealing range built off of the pre-market, right? We have a dealing range built off of an opening range. What is the opening range? The opening range is the first 30 minutes of a thing. So for the New York session, the opening range for the New York session is from 9:30 to 10. So you look at the highest high and the lowest low between the hours of 9:30 and 10, and that is a algorithmic dealing range that IPTA understands. So when we get over here at this 10 o'clock candle right there, we immediately attack the buy side of our opening range. This is the lowest low and the highest high of our opening range. We immediately attack the buy side, right? Right now, price is in a sell program, and we immediately attack the buy side. Cool. It's attacking the side that I want to see. That's the manipulation. That's the manipulation I want to see, right? We trade up here. If you notice here, I have two important fair value gaps marked out. Why are these fair value gaps important, Tim? This SIBI right here is the first SIBI, and this displacement down right there. This SIBI right here is the first SIBI, and this displacement down right there. Okay, as we trade up into them, right, we want to see, is price going to show us premium sensitivity at this SIBI, right? We get here, we trade all the way up to the top of it. We close respecting consequent encroachment, but we traded all the way to the top of it. That's showing the price might be a little bit stronger than I want it to be, right? We come right back and we close at the high of it. So now I'm looking, do we see discount sensitivity as far as closing above consequent encroachment of this right here, right? And we do. Close above consequent encroachment, wick down into the balance, close above consequent encroachment, right? So I'm seeing discount sensitivity. So I'm still looking up. Do we get, what kind of sensitivity do we get at this SIBI right here? Trade up on that counter there. Nice premium sensitivity there, right? Then this one here, right? We don't get back to it, but the very next candle, boom, we trade up and we close above consequent encroachment right there. So that right there is telling me it wants to go up some more, right? It wants to go up some more. If you notice right here, we have a 5-minute BISI up there. If we go up to the 5-minute time frame, right? Go up to our 5-minute time frame. Where's my, okay, there we go, right? We go up to our 5-minute time frame, right? That is a very important BISI right there. What BISI is that? That BISI is the first BISI created when we got this displacement right here, right? Well, the first fair value gap leaving this range. There is a small BISI right there, but this BISI here is the first one on displacement outside of this range right here. So that BISI right there, when we get back down below it, right, now we're looking for that to be a bearish inversion fair value gap. That's an inversion fair value gap right there, because it's the first BISI created as we went up, took that liquidity, got to change the state of delivery, right? So now on the 1-minute time frame, right, the algorithm is showing us that, hey, I just closed above consequent encroachment of this important fair value gap, so I want to go higher, right? So then it trades up, right? Trades above consequent encroachment, touches that old high, right? Last week's high, touches that old high. And when we shrink up right here, right? When we shrink up right there, you see over here during pre-market is when we went above that high, right? Because we look back, this was yesterday's time, right? During pre-market, we went above that high. Now that we're inside the 9:30 time frame, we go above that same high and get a huge rejection. Boom! Huge rejection. As soon as we get that rejection, what do? Boom! Drop back down, close below consequent encroachment of the lower one. It rip through this one here, right? Rip through this, right? See this here? Efficient delivery. Leave it. What is that now? A balanced price range, right? Soon as we tap that high, boom! No wick on there at all. Rip through this balanced price range right there. Create a SIBI. Getting up out of there, right? And then we come back and what do we see? Premium sensitivity, right? We come over here into that SIBI, can't even make it to the fair value gap. Chopping around, we come over here, we get us a nice little manipulation wick there. Where does that manipulation wick goes? It goes right up here to just above consequent encroachment, right? So if we look at let's see what that consequent encroachment is. All right, if we, wait a minute, that's not even marked, right? How did that get off of there? Get back on that right spot, right? Okay, now it's marked right. So we'll go here to the low, all right? So that consequent encroachment is 26,000. Jesus Christ. That what's the name is all in my way. I can't see the 26,058 and a half, right? So 26,058 and a half is the consequent encroachment of that. We went up into that octant just above consequent encroachment, right? And then immediately wick back down, right? Nice strong little manipulation wick inside this little consolidation area here, right? We wicked up, took out the short term buy side, traded up into that reclaimed SIBI, reclaimed fair value gap, rejected off of it, and then price started to give up the ghost, right? Start to give up the ghost based off of the PD arrays that were outside of the new day opening, our opening range gap, right? Everything up there. Outside of that, once we got back down into our opening range gap, right? Notice price came here, hovered around that upper quadrant. This is the upper quadrant of the opening range gap, and this is our new day opening gap, right? Price hovered around that area there, right? Popped up into that 930 open, right? Into that SIBI there. All these PD arrays are made at these bus stops. Remember, we say we look at this is the high of that opening range gap, right there at that 930 open. That's the high of our opening range gap. Sell side, a SIBI made there and a BISI made there, right at that bus stop. Traded up into that, and then we got a smooth low resistance liquidity run all the way down right to consequent encroachment of that 15-minute SIBI that we had pointed out. After hitting that 15-minute SIBI, right, now we've come down, right, and we've extended the bearish dealing range. Remember we said we was in a bearish dealing range. We extended it down here, traded back up, extended it down there, right, extending that bearish dealing range. All right. Now that we continue to extend that bearish dealing range, we go into a whole bunch of high resistance. I think this is during the time when the nominee for Fed chair, the president's nominee for Fed chair, was getting ripped apart by the Senate committee. Man, when I tell you Warren, Senator Warren, Elizabeth Warren, oh, she wasn't giving him no slack. None of them giving him slack, but Elizabeth Warren was, she was on him. That boy was getting chewed up. I felt bad for the poor boy. All right. So we got all this back and forth, back and forth, back and forth, back and forth. But look at what price is doing, right? We got this strong rally up, right? We came down, used the low of the opening range gap because we traded outside of the opening range gap into that 15-minute PD array, traded back up into the opening range gap, came down to the low, right? Bodies respecting the lower quadrant, right? Rallied up into that octant just in between consequent encroachment and the upper quadrant, right? Can't make it to the upper quadrant. That's showing weakness, right? Can't make it to the upper quadrant right here at the low of this balanced price range. That's showing weakness, not a desire to want to cut through this balanced price range, right? We drop back down again, come all the way down, high resistance, all the way down into the lowest imbalance, all the way down into the bullish order block, right? And we trade all the way back up to consequent encroachment, back up to that octant above consequent encroachment. Still can't make it to the upper quadrant, right? Bodies of the candles this time are totally respecting the SIBI, that first SIBI that was created on that move down there. Bodies of the candles totally respecting that, right? Bodies of the candles totally respecting the opening, the new day opening gap, right? And then we stair step our way back down, right? Those octants of the opening range gap, and then we eventually, right, trade down, come very close to the liquidity pool that we're watching, right? Come very close to the liquidity pool that we're watching, right? And this is all high resistance, right? So what do you do when it's in high resistance and you're in no man's land? Yep, you guessed it. We get our old friend Fibonacci, right? Come from that liquidity pool, right? Come down to this liquidity pool here at 26,568 and 3/4, right? 26,568 and 3/4. All right. And then if you notice, we come down, right? We trade down to event horizon, go down to the lower quadrant right there. Matter of fact, let's put it in event horizon mode so it makes sense to our eyes, right? We're not just looking at like a bunch of gobbledygook, right? We're going to go to event horizon, right? Fatten up those lines. Right. Make the font bigger. Okay. There we go. So, what did we say about any range that you have graded, right? The upper quadrant down to the lower quadrant, right? That's where you're looking for the bulk of your trading opportunities, right? Inside that range right there. Okay, so as we come down into there, that's the upper quadrant. This is the high, right? We come down to that upper quadrant. Notice PD arrays being formed at that upper quadrant, right? We got this SIBI right here. This is the first one off of displacement down, coming out of this area right there. Once we hit event horizon, we trade back up into that SIBI. It's also in confluence with consequent encroachment of that 15-minute fair value gap. We drop down below event horizon, hit that lower quadrant, right? Once we hit that lower quadrant, we come back up, get a bullish break in market structure, right? That first busy that's created after that break in market structure, we trade back down into it, and then we rally all the way back up, coming back up here into this opening range gap, and our opening range gap, and taking out all of this trend line liquidity right here that was built up, right? We see all of that trend line liquidity that was attacked, right, on this move up. Took out all that trend line liquidity right there, right? Not only did we take out trend line liquidity, right, we are creating relative equal highs for in as far as like longer term, right? We got an intermediate term high over here, right? And then we come over here and we create another intermediate term high right there, creating relative equal highs right there. All right, so we got our bullish breaking market structure, taking out trend line liquidity, relative equal highs. We trade back down to that upper quadrant. That busy right there is created in line with that upper quadrant right there, right? We trade down into the busy, come back up here, up to the high, right? Drop back down, manipulate out that sell side into the bullish order block at the low. Like you see the the discount sensitivity at the 15-minute fair value gap, right? Then we rally up and we come up and we take out the relative equal highs. Matter of fact, we hit that one too. We take out all these relative equal highs at our intermediate term highs that we talked about right there. We came up, swept those. Once we sweep that liquidity at those intermediate term highs, right? What do we get? Pow! Come down there and run into the sell side that we talked about in the AM.
Let him cook! I said let him cook!
Y'all do me a favor, man. Hit a like for the algorithm and subscribe to the channel if you ain't subscribed. And for anybody who think that you're doing all this in hindsight, you ain't take no trades off of it, you can't trade for real, just want to let you know. That's in accordance to what you think. Do anybody got any questions for me, man? Do anybody got any questions for me? What's that Count Dracula for? You say I sound like Count Dracula. What that Count Dracula for? I heard you, Yolanda. What you said?
I charted something, and if you don't mind going over again, because I saw that it actually hit the significance of that opening kill zone time at 7 and that first fair value gap. If you go to the minute chart.
You said the first fair value gap at 7.
So of the start of that New York kill zone at 7 a.m. So I started over there this morning. Let's see, where is it?
All right, so this hour we start here. Okay, so this is our 7 a.m. open right here. And then
if you look at, so we got our 7 a.m. open.
We got a 7 a.m. open here.
And then your first significant fair value.
So when I was mapping out fair value gaps, I was looking at this one here as my first SIBI. That displaced down right there. Off of displacement coming down right there. That's why I was watching that SIBI right there. This was the first one off this displacement leg right here. It wasn't I wasn't so much looking at it based off of 7 o'clock. It was just okay. So is this the same one you was looking at?
Yeah, I didn't hear you talk about it. If you already talked about it, don't worry about it. I'll go back and look at the recording. Today was like, one of the first days I start looking at it, and I know it's the opening of the kill zone, and I just saw that we had reacted off of it. Got a couple of reactions off of it twice after we came back, like you said, and re-inverted and used it as a reclaim, and we start getting reactions when we opened, I think. All right. So the significance is that it's the beginning of the kill zone. Is that what it is again?
It can be. I'm trying to see which ones that I was focusing on.
Because I did the 7 a.m. and I think I did an 8 a.m.
I did this one here at 8:37. That was the busy up there, and then I had another one somewhere. Did I delete it? There was another. Oh, there it is right there. So this is the one I had here. I was looking at this one and this one. I wasn't looking at that one over there. These are the two I was watching right here. The first one in this displacement down, and the first one in this displacement down right there. Now this one over here after 7, that will be the first one in this displacement down right there. Now, there's nothing wrong with looking at it as, okay, we're inside. This right here is at 708. So that's being created inside of a macro window, right? It's being created inside a macro window because it's from between 650 and 710. It's being created at the start of the pre-market, right? It's at the our pre-market time, right? So our New York pre-market is 7 a.m. to 9:30, right? So that's a window that the algorithm recognizes, and yeah, that is the first one within that hour, right? With first one based off displacement within that hour. Those put emphasis on PD arrays, like in that the first displacement of that hour. That's important. So it's a lot of different things as far as time you can relate it to. But in this instance right here, for me, when you're looking at that right there, personally, I will put the emphasis on it's the first one in this displacement. And then I'll say, okay, what time was this displacement? Okay, this is inside a macro time. Then I'll put that extra icing on the cake because I see, okay, it was created during a certain time. You know what I'm saying? And so I'm looking at it based off the displacement first, because this is the algorithm showing you its desire behind the order flow, and then the confluence of it doing it at a certain time. That's the icing on the cake. Do that make sense?
Yes, that makes sense. And then I carried it through too, but is it one of those things like we keep on a chart for that morning session, or does it lose its
It don't never go stale.
potency after we do the opening bell? So
It don't never go stale. If
Okay.
prices in this area,
Yes.
prices in this area, you wanna know it's coming up on that.
Okay.
I don't care if it's next week Wednesday. If prices in the area, you want to know it's coming up on that, because that's a important PD array. It's the first one based off some displacement. The algorithm, remember, this is when I started tipping my hand. I started displacing over here for a reason. I left that PD array there for a reason, right? So they never go stale, because if you notice, right? If you notice here, for the PD arrays that I was watching here, right? Notice how much they're respecting the one that you was watching, right? Notice how much they're respecting the ones that you was watching. And then check this out. I should have been recording this portion right here, right? I was looking at this one and this one, because these are the first PD arrays, these first imbalances in these displacement legs that we were coming up to. That's why I got them on my radar, looking to the left. I want to see how do we react here. But what do you notice about this one right here? This is the first one overall. Out of all these displacements, this is the very first one. And which one does it respect beautifully at the consequent encroachment? Let me blow it up big so everybody can see it, right? And this ain't even one that I had on my chart, right? This is something that somebody in the gang was watching. But look at those bodies right there, right? This body right here got a little small closure above it, but as soon as it did, after this manipulation up here that we was talking about, pow! Got it. And that's the first one, right? Over all of these. We was going up, this right there, that displacement there, that's when the algorithm started tipping its hand, right? We displaced, got a wig snatcher, down, up, down, and went down, right? This was the start of the wig snatcher. That's the very first one right there. And look at how the algorithm was respecting it. All right. Y'all give it up for Yolanda for picking out that reclaimed fair value gap, seeing that reclaimed fair value gap and noticing how it hit to the T. But there's no algorithm. What else you got, Yolanda? I wish we would have been recording that part. Y'all got to come back and look at that.
I thought you were still recording, yeah, because I started this morning, was really my first morning, and I went back and I started because I wanted to know how we were reacting. And then that was, I knew I was going to ask you, I think it was after we got off too.
Yeah.
And so I know I wanted to ask you here. So that's what I've been kind of looking at. And I'm going to start also paying attention to the midnight gap as well. I know I always look at midnight as an opening price. And if I'm trading like to it, I'll use that as a profit target. But I want to, again, start paying attention to that as well.
Mm-hmm. Yep. Anything that the algorithm will use, right, and prices trading near it, you want to have it on your chart. These PD arrays never go stale. They never go stale. It almost feel illegal when you start seeing this stuff in real time and it be hitting like that. I'm telling y'all better tap in, man. Yes, sir. Fire. That's that fire. Y'all give it up again for Yolanda, man. Telling y'all, man. When you start seeing this stuff, you can't unsee it. You can't unsee it when you start seeing this stuff, man. Do anybody else got anything? Now, that little piece that we talked about, that ain't gonna be in no gems from the live stream because I'm not recording. But it's here. It's in this live stream. Just skip all the way down here to the end. Right? We've been on here for a while. I don't know. Let me see how long we've been on here. We've been on here for a minute. I don't know. I can't see the time. I can't see the time right now for some reason. I don't know why I can't see the time. They usually count me down. Where's my Zoom? The Zoom will show me the time. At least I thought the Zoom would show me the time. Ain't nothing showing me the time. I don't know. We've been on here for a while. It's 7:37. So we've been on here a little over an hour and a half. Oh, there it is right up there. Hour and 36 minutes. It's right up there at the top. On the YouTube thing. It's hour and 36 minutes. So if you want to watch this part when Yolanda was talking about that, just skip in there to about an hour and 20 minutes or so and just start scanning around that area. All right, man. I don't see nothing in the chat. Ain't nobody in the gang saying anything. So we're going to go ahead and call it there. Tomorrow is Wednesday. My son's 19th birthday is Thursday, y'all. My son turning 19 on Thursday. Man, I'm getting old. That's why I got all this gray hair in my beard. My son turning 19 on Thursday. Y'all wish my son a happy birthday. He a struggling teenager that's working for peanut scraps. He said, Dad, I can't make it off this. I need a job that pay more money. I'm trying to figure out what he need money for. He don't pay no bills. Only thing he do is put gas in his car. He don't pay insurance for it. He don't pay no bills around the house. What he need more money for? What he need more money for, chat? Told I can't cut this, man. Like, I got my check and that it's averaging like $10 an hour because he worked like a serving job now where they get paid like a base pay and then the rest of their pay is based off tips and they don't get direct tips from the people. Like you tip and then everybody they split the tip up between everybody on the shift. Like the people in the kitchen don't get in on the tips. It's just the people that work out in the front where he work at. So he was like, man, it's averaging like $10 an hour. I said, man, $10 an hour good for somebody 19 with no bills. Oh man, I can't make it off that. I need more. I don't know what you try to do. You can't make it off $10 an hour. What you trying to do? Hey. Him and his girlfriend went to the wild animal safari today. And like one of his favorite animals is a capybara, or however you say them big rat looking things. And so they had videos when they was feeding the capybara big heads of lettuce. Like feeding the capybara those right there. They went on a little animal safari thing. And so he like capybaras and he like penguins. They ain't got no penguins. They got penguins in the Atlanta aquarium in Atlanta, but I don't think they got none in there. But yeah, I know. It's crazy. My brother crazy. I was trying to find this thing. I was trying to find this picture of a shirt that he said. I'm done, y'all. I ain't got nothing else. There it is. I was trying to find this picture about to put this picture in Discord and share my screen with y'all to show you this crazy. Now they said this was a kid shirt. This was a kid shirt that they saw. I said, wait a minute, what in the diddy wear? What in the diddy wear is going on here? They said this was a kid shirt. Hold on, I'm about to put it in there now. I say, what in the diddy where? Let me open up my Discord. Oh yeah, that's right one. Let me open up my Discord. Am I sharing? Yeah, I'm sharing my screen. Main chat. All right. Shirt right here. I said, what in the diddy? I got slobbered on. And then look at the animals with their yeah. Look at that toddler tea. What in the Epstein files are they doing up there at the wild animal safari? No, sir. No, sir. I say, what in the Epstein files is going on here? And then this right here is no, that I'm not. That's she in there. That's the one that she in. So I'm gonna show this one here. I'm gonna download this one right here. All right. Let me see here. There you go. All right. And this right here. This one is feeding the capybara. That boy going crazy. I said, let me sit down and get in on this. Let me get in on this right here. Out there feeding the capybara. That's what they'll feed the capybara. But yeah, they but that I got slobbered on. Y'all better stop all that. Y'all better stop that. Hey, gang. Tomorrow is tape reading. We got tape reading at 9. Ain't nobody been stepping up to volunteer. Y'all been hiding in the background. Everybody be talking about, I'ma do it. But ain't nobody stepping up to volunteer. Y'all been hiding in the background. Told you we sprinting now. We sprinting. Hey, I appreciate y'all for tapping in. Y'all give it up for yourself. Thank y'all again for another interactive Jolene GC, a quiet season. I wonder what Jolene up to. I ain't talked to Jolene in a month of Sundays. Thank y'all for tuning in to another episode of Tim's Tidbits. This has been another episode of Intraday Price Action Recap. Hey, man. Hey, man. See y'all in the morning at 9 for the gang, for the tape reading. If this was your first time tuning in, I appreciate you. Shout out Mick it that tuned in for the first time. You missed a lot. Yeah, hit the replay button. You missed a lot. Yay. Till the next time I decide to get on Al Gore's internet and share my thoughts on this thing that we call price action. It's your boy, Timothy Lee Rogers Sr., a.k.a. Aranya Grande. Man, y'all be safe out here in these trading streets, man. Gone.